Hello everybody, welcome to Bitcoin Predator. Smash the like button and hit subscribe. So today I want to talk about what happened yesterday, which was the Fed meeting. In summary, the Fed will keep rates as they are and pretty much a wait and see approach. As you can see right here on the May 7 candle, there was a little bit of volatility, but nothing really impactful on the long run of the Bitcoin price. So we can say that pretty much the Fed understands that there will be a lot of uncertainty because of the high tariffs and the stagflation risk. This is because tariffs can increase inflation and slow economic growth, eventually leading to a high unemployment rate. Nevertheless, Bitcoin remains bullish because we can see there is still a lot of room for the pi cycle crossover. In addition to that, we can also see that Bitcoin has remained with a high correlation with the M2 global liquidity. There has been a short pullback on the M2 and the Bitcoin price followed the same pullback on the short term. So I still think this correlation will remain until we see an actual reversal of the M2 global liquidity in the future by the end of 2025, and we can actually make a good estimation of when the Bitcoin price will start to go down. Now, if you haven't watched my previous video, I extremely recommend you to take a look because we broke down this 4-hour order block analysis and we actually predicted that the Bitcoin price was going to get liquidity in this order block before continue to go up. And guess what? This is exactly what happened. The price got into the order block, got liquidity, and even there was a slight liquidity sweep on the 900,000 level. After that, we got a bullish candle and a change of character in the short term in which the price continued to go up. We can clearly see that this break of structure was intentional. There is a lot of volume right here. After that, there was a fair value gap formed around this region, which got quickly mitigated at around 4 p.m. on May 7, right after the Fed's meeting on the 95,800,000 level, and it also broke the level of 97,100, and it also touched the 99,500,000 level. So if you still want to join the bull run, I would expect a pullback to the 4-hour fair value gap, wait for the confirmation, change of character, and then place your long trade and join the bull run. I would not personally take a short position in the short term because we don't know how much the price will go back, because if you see right here this short pullback that happened yesterday, the price did not even touch the 95,300 level. It only got a liquidity sweep and then continued to go up with strong volume. Personally, I would say that the next targets are the 104,000 level, 107,000 and 109,600 level. But I recommend to pay special attention to the 100,000 level because I think this is a psychological level in which once hit, we're gonna see a huge impact on the majority of trades being placed. And I think this is going to impact especially the fear and greed index. I think this is going to, once the price hits 100,000, I think the index will jump to the 60 level. So we are still in the neutral phase of the fear and greed index. You may still have some time in order to join the bull run, but I would be extremely careful once the index hits the greed and extreme greed level, especially the 90. As you know, the longer you wait, the higher the risk of a price reversal. So in the end of the day, we are still doing good, bullish momentum is still strong, and let's see how the price plays out over the next days. Hit the like and subscribe button. Thanks for watching. See you in the next video.